to my far kind of left, I've got Olly Hughes, who's Managing Director of Forestry, with over 25 years of experience in the finance sector, all three of them are from Gresham House. Will talk us through some of their experience within the forestry sector and managing this sort of asset class. Sorry. In the middle, we've got Rebecca Craddock-Taylor, who's Director of Sustainable Investment, with 12 years of experience in sustainable investing, working with Gresham House as well. And finally, to my left here, Dave Gardner, who's Chief Investment Officer, responsible solely for the forestry sector within Gresham House, with 30 years experience in the global forestry industry, both in the UK and overseas. My name's Toby Belsom. I'm a director at PRI. And PRI, just is useful to give a little bit of framing, because it is, before we kind of move to discussion, PRI is an organisation that's grown significantly, which represents some of the pressures on both institutional investors and asset owners that are growing not only in the forestry sector, but across a range of different asset classes, to start to think about their own commitments in terms of climate, the response to regulation, which is growing in this area as well, and the way they're perceived by stakeholders, both their beneficiaries, regulators, and other kind of bodies who monitor the capital markets more broadly. I'm not a forestry specialist, I'll put my hands up there, but it's the type of asset class where there is a real key focus on what level of contribution this asset class and the concept of natural capital, and we'll explore about that in a second, can help be additive to these investors' broader principles, these broader commitments, these broader responses to regulation from the EU and elsewhere and other regulatory bodies. So just a quick mention about Gresham House. Actually, Rebecca, you might want to do a little bit of an overview about Gresham House, if you'd like, but kind of turning to you maybe first, in terms of that concept that I mentioned about natural capital. It's a real buzzword within institutional investor environment at the moment. Maybe, and part of that is driven by that recent conference within the COP conference that's coming. Maybe talk a bit about how that what implications that has to the way your clients and investors more broadly are thinking about biodiversity, natural capital.
Sure, thanks, Toby. So, intro to Gresham House. We are a specialist asset manager investing across a range of real assets, including forestry, which we'll talk about today. We've also got sustainable infrastructure, real estate, renewables and battery storage, and we also invest across public and private equity. On the real asset side, that's more where my focus is, in looking at the sustainability of those particular assets and ensuring that they are focused as best as we can when it comes to the management of ESG risk, but also looking at the impacts that those assets have on our economies and our societies. So, I think a good place to start this particular discussion is, what is natural capital, and how do we think about natural capital? Well, we use the Natural Capital Coalition's definition, which states that natural capital is the combination of all renewable and non-renewable natural resources across the world that combine to yield a benefit to people. Those benefits can be further broken down into 4 core ecosystem services: provisioning, regulating, supporting, and cultural, and we'll go through some examples of those later. But that's the way that we think about it. And when we're looking at opportunities across natural capital, it's understanding, one, the dependencies that particular investments have across those 4 ecosystem services, but also the impacts that they have on those as well. Biodiversity, where does it fit within all of that? Well, biodiversity pretty much underpins the provision of all of those ecosystem services. It provides that resilience and stability beneath the natural capital assets that we'll talk a little bit about today. In terms of markets for natural capital, there are many markets out there that already exist. Lots of people talk about it as though it's a new area, but actually there are a lot of established markets. The agricultural industry is a good example of that. Forestry is another one. But there also remain a number of ecosystem services that are either completely unvalued within our economic systems currently, or are very much undervalued. So a good example of that within the agricultural industry is when a farmer is looking to price their products, they won't necessarily include a cost item for pollination, but they will include a cost item for pesticides. That's the sort of difference that you get when it comes to thinking about natural capital. Actually, the negative outputs are potentially priced in those pesticides, but the positive and the dependencies that those assets have aren't. So that has to start changing. Nature is immensely powerful, and we've seen that over the last, well, just recently they talked about it in the previous panel with the number of climate events that are happening across the world. We've seen that power that nature has, so we have to start realizing the impacts that nature can have on our economies and the reliance that our GDP also has on that. And there are studies to show that over half of our world's GDP is reliant on nature, but we're not factoring that into the valuations of companies and also investments at the moment. So you mentioned COP, and COP15 in Kunming last year was a sort of moment of change when it comes to nature in respect of it elevated the conversation around nature and biodiversity. And we have seen a shift in the markets since that point. Corporates are beginning to talk more about nature within their disclosures. It still remains quite low, and we expect in the next few years that will increase and enhance. Investors are asking more questions. They want to understand how they can make returns from investing in nature. So how can they generate a return whilst also aiming to protect or restore nature? And there are new frameworks being developed. So we had the TNFD being released a couple of weeks ago, the Task Force for Nature-Related Financial Disclosures, quite a mouthful. And because of all of those things combined together, we expect that there'll be a continued trend in the reflection that natural capital will become a fundamental asset class for many investors across the world. And forestry is a good example of that. Forestry provides timber, that's a provisioning ecosystem service, but it also provides our societies a number of other benefits that mostly remain unvalued at the moment. We are beginning to see new markets evolve, and the carbon markets are considered quite an established market, but actually they're very small in comparison to our other economic markets, especially within the provisioning services. So that's beginning to change, and those broader values that forests offer investors and our societies are beginning to be recognised, and the revenue streams, the potential revenue streams for forestry investors are broadening because of our ability to start being able to, one, recognise, but also actually value nature itself.
Sorry, Rebecca, thanks. That's given us a good kind of picture on the why, in a sense. Olly, maybe pick up from there and do a bit on the what, and particularly, again, it was mentioned in the earlier session about this kind of measuring and pricing of some of the, I won't use the word innovative or new, because these things aren't new, but different income streams you can generate from forestry.
Sure, thank you, Toby, and good afternoon all. It's nice to be here. And as discussed, I'm head of the forestry division, so I'm going to be very forestry focused, and Rebecca's been a little higher leveled in terms of that. But I think, having been to a number of conferences recently, the concept of reality and real world change, and as a corporate investor or as a corporate looking to make a real world change, it's very hard at the moment to see where those opportunities lie and what those opportunities are and what is real and what is measurable and what the outcome thereon is. And we feel actually that, frankly, the agricultural forestry sector specifically has not been very good at explaining what we do, how we do it, why we do it, what the benefits of it are, and more importantly, how it is evolving and how it is changing. And today, well, hopefully we can uncover some of that, but also to demonstrate the opportunities that are there now, the opportunities that are real and that have a track record and that have a deliverable outcome. And I guess really what I just wanted to spend 5 minutes on was talking about how forestry can help corporates with those sustainability commitments, can deliver an outcome at some scale, and then also have some sort of profile of outcome within a finite period of time. So forestry as an investment is a pretty unique investment in that it has a combination of tried and tested, known, stable, long-term return from an investment perspective, but those returns, in our opinion, are aligned heavily with real-world outcomes and real-world sustainable benefit outcomes, which are necessarily a little harder to measure in other things. And so when I talk about long-term stable returns, unashamable pitch here, but we as an entity have been delivering within our forestry funds returns, IRRs of over 14% over the last decade. So those are very strong, stable returns. Those returns have, because everything we touch, eat, transport, have a fibre-based interaction within them, very highly correlated to inflation. But because forestry has an unusual form of rotation with long-term harvesting windows, a very strong delinkage from the wider economy and economic investments. And so it is a very strong portfolio diversifier and has really very low correlation to other asset classes. So in its own right, as a corporate financial investment, it is a very strong opportunity and delivers long-term stable outcome. But what it does do is bring those additional benefits that we're seeing now, which are being layered on top of that traditional core forestry. And we would put those into the brackets of carbon sequestration. There's obviously confinements of where that carbon sequestration will become relevant from a perspective of monetization. But whatever way you look at it, a tree is sequestering carbon and is locking that carbon up. And when used productively, will be locking that carbon up for a very long time. It's also, and this is absolutely key in terms of what we're talking about, creating a sustainable long-term material that can be used and used to offset highly intensive alternatives which are generally derived out of carbon. And then probably more recently, and this is where we have to be very careful as a sector and as industry that we don't oversell ourselves, but there is now an opportunity to utilize forestry and forestry management as a way of enhancing biodiversity and natural development opportunity. That is something that is changing and has changed fundamentally. And when you wrap all of that together, what have you got? Well, you've got, in our view, natural capital. You've got that concept of an investable form of natural capital. And I take one slight tangent here, but whatever way you look at the future, we recently issued a global timber outlook of fibre demand over the next 3 decades globally. Our view is that fibre demand is going to increase somewhere in the region of 2.7 times, it's quite specific that, but 2.7 times over the next 3 decades. The World Bank says 4 times. So, that we effectively need to work out how we are going to sustainably supply that demand. And that demand is coming from an increase in population, but not just that increase in population, that urbanization of that population. We're seeing a transition away from highly intensive carbon materials such as concrete and steel. And we've got one. It's timber. It's wood fibre. And then we've also got a chronic shortage of global housing. These are real-world problems. These are real-world issues that need to change and need to evolve. And we've got something that can deliver that. So we really need to be conscious of that necessity for the need to, A, look after our current forest portfolio, but also look at how we enhance and increase that opportunity. And it's got to be both. It's got to be balanced. We're not here to say it's all got to be a monoculturalistic plantation of forestry, but you've got to realize and look at this in the wider concept and aspect. I think the statistics are somewhere in the region of 10 million hectares of forests are being deforested every year at the moment. That is out of a total area of around 800 million hectares. That is not going to take very long to get rid of that. At the same time, 40% of the global supply of fibre is provided by about 3% of that 800 million hectares. We've got to think how we balance this within our portfolios. So that's the the commercial side of it, but also we've got to also be aware of the sustainable and the developmental side of that and the natural capital side of that. And we're looking at ways of how we as managers can enhance that, how we think about that. And a lot of the people that are here today we're interacting with in terms of that measurement and that understanding of the natural capital side of things. And I think, and I'm sure that the sector is evolving fundamentally at the moment and is changing for the better. We've moved on fundamentally from the 60s and 70s where, yes, there was very singular monoculture plantation from fence to fence. That has moved significantly. And entities like ourselves, who are managing very significant portfolios of assets across Europe now, are making changes in the form of things like our charter. And our charter is our way of saying, actually, we feel there are probably 6 key metrics that need to be measured and understood, ranging from biodiversity to sustainable material production to local community interaction to jobs. All of these things need to be measured, managed, and monitored. And if we measure them and we manage them, we're transparent about them, we can give investors an understanding of what their investment entails, how it is evolving, how it is changing for the better. And that will then encourage further capital to come in to deliver outcomes. So we feel there's a very strong case for forestry to be really front and centre of a natural capital transition, number one. Number two, to be core in that transition to a circular bioeconomy. You know, we cannot leave behind the concept that there are some fundamental real-world changes required to take us away from the core hydrocarbon cycle. And forestry is there. And anything that you can make out of hydrocarbons, you can make out of wood fibre. So we've got to continue to drive that. So that's our view.
Thanks, Ollie. And Dave, kind of turning from you, if that's the why and the what in this sense, this is the how, just drill down to, I think you're going to use a practical example, aren't you, about how some of that, not theory, because it's not theory, kind of work in action within projects in Gresham.
Thanks very much. I think Rebecca and Ollie have sort of given the wide view, but sometimes it takes a picture and a case study to kind of cement and get that understanding across. So hopefully we can see a case study of a plantation that we manage in Wales called Brycheiniog. Now, this is a good case study. It's a very representative forest of the way modern forestry is. This is very different from what you may view from the sort of 60s, 70s, and even 80s, where forestry went through a very, very commercial phase. What you can see here is modern forestry. You can see that it fits into the landscape. It's designed to have both a visual impression that is blending into the landscape, but this is a very modern, productive forest. This is being managed for the production of timber. And while that is perhaps the core theme for the forest, it also produces a wide range of sustainability outcomes, which I'll talk to. Just on the provisioning side, this forest will sequestrate over the next 25 years just under 500,000 tons of carbon dioxide. This is really important in the global net zero picture. So modern forestry is highly productive. It uses the smallest amount of land it can to produce the most amount of timber that we need. And that is mirrored almost directly on the carbon side. This forest will produce enough timber to provide about 5,500 four-bedroom houses. And remember, this is just one small forest in Wales. So that's on the sort of that's on the sort of core theme of the forest. It also produces a return for the capital invested, which is really important. We always have to remember that sustainability is a three-legged stool. We have to have the social side, we have to have the environmental side, but it's really important that the financial side is the third leg and is providing that ongoing financial stability. If we look at the other services this forest is producing, it is naturally filtering the water that falls within this water catchment area and feeds down to the river. This is very important for water quality, but it's also becoming more and more important for flood control. As climate change is taking more impact, you're starting to see these one-off events happening more and more often. And councils are spending millions of pounds in trying to work out how to control flooding events. Forestry has always been a very natural way of doing this. If you look at the other aspects of the forest, which include recreation, I don't know how many of you are mountain bikers or walkers, but actually walking through a well-managed forest should be a very pleasurable experience. And certainly this forest is very, very popular for public, for walking, but particularly for mountain biking. It also provides recreation in the form of picnic areas and areas where people can just relax. There's been quite a lot of studies showing that actually mental well-being is definitely enhanced by nature and forests. And finally, looking at the sort of broader aspects on the community side of things, this is really important for rural jobs, which is why it gets so much government support in general around the world, is that it is local communities and rural communities that are slowly disappearing, and rural jobs are particularly important. And forestry is one of, together with agriculture, are the two sort of underpinning industries that support those rural jobs. So really coming back to Olly's point, we're here to make our investors money. That's important from a sustainability point of view. But the forest is providing a raw material which is substituting out high intensity carbon materials such as concrete and steel. It's really important, we need it, and if we don't grow it here, we have to grow it somewhere else. We already import more than 80% of our timber requirements in the UK. If we do not get our planting targets up, that will move towards 90%. This is a very poor reflection on the way we are managing our land. And finally, the forests are providing a very wide range of benefits to society. I think I'll leave it there for questions.
Thank you. We've got about 5 minutes or so for questions. And we've got one over there, which we can start off with. I think we've got a speaker.
Thank you. I was wondering if you gave some thoughts on how to give a value to the forest impact on water. You said that it has an important impact on water filtering, quality, and so on. Have you given a value for, as an investor?
Mm-hmm. I'll tell you what, let's take this question down here at the same time, and then we'll...
Yeah, hi, sorry, I just wondering if you could clarify, is the forest in Wales a carbon project? No, okay, thank you.
Clarification. Start on.
Yeah, just on the income stream. So with most of the sort of consequent revenue streams that could come from these forests are in markets that are really just starting and don't have that certainty. So we do not include those revenue flows in our sort of core returns. But I think that's the only one which is sort of coming to more a level of maturity where that is the case, might be in the carbon markets. And in some of our investments where there is some certainty of that carbon, we might include it in the returns. But for example, in the UK, the funds, they do not include the carbon revenue flows in the direct return. With regards to the water, that's one of these very early stage ones, and it is very asset specific. So if you're in a water catchment area where there is flooding, the risk of flooding, then what we're seeing is that is a potential revenue flow for the future as we develop out and talk to councils at the benefits and do the hydrology modelling, etc. But it's not core in our returns at the moment.
Anything to add, Olly?
Yeah, just on that, we are starting to see utilities make payments for flood prevention and water purification and for specific mitigation of certain events, but it's very thin at the moment, and I think regulatorily that will become more relevant over time. So, and there's a balance between regulatory influence and outcome. So what we look at from a perspective of the natural capital value is a layering on and a layering on of the carbon and then of these other opportunities. And and that's important in terms of when you ask whether that is a carbon project, is we don't have any carbon projects. We have productive forests that we look to deliver all of these outcomes, including jobs and including all of the things that we've talked about. And so carbon may be one of the aspects of that, but it's not absolutely a core driver.
Thanks, Olly. We've got 2 questions over there, then one coming down there. So if we could just have those 2.
Hello, Geoffroy Cagnard from Forestry Europe. We experienced a very strong increase of value in the assets in forestry the last 2 years, especially on the UK market. How do you cope with that? Because it seems that we are a bit decorrelated with the current source of income. Is it due to expectation with carbon market or biodiversity market? What's your point of view about that? Do you think it's healthy or should be corrected?
I'll have a go at that. So I think certainly in the UK markets there has been a very strong value appreciation, which some might argue is a catch-up with the rest of Europe in terms of expected returns within that forestry sector. So there's been a certain amount of catch-up globally with other markets. However, I think when we are valuing an asset, what we're valuing that asset on is the future income of the forestry, the timber products, and these other layers of value that we've been talking about. And what we have seen is that value is reflecting effectively the increase in timber value over the last decade and the price of timber. And based upon that supply-demand imbalance that I was talking about before, a 4-fold increase in demand for timber set against a sustainable supply, which is pretty limited, to be honest with you, over the next... It takes 30 years to grow a softwood tree in the UK. You can't suddenly pivot away from a supply position. We see that is what is one of the core drivers of that. Now, looking forwards, are we going to see 14% IRRs for the next 10 years? I don't think so. But are we going to see more stable, sensible, single-digit IRRs? Yes, I think that's still very achievable.
Thanks, Olly. One more over there, I think.
Hi there, Charlie Sitchell, Forestry Linked Securities. Olly, we were talking earlier a bit about this interplay between core forestry and carbon. Do you think we could elaborate a bit more about that in light of Verra's recent amendments to some of their standards, and the fact that the way I see it is that there's not currently a fit standard for commercial forestry to account for the way that it actually sequesters carbon, which for a lot of investors is very important and is actually creating a blockage to the market at the moment.
Thank you.
Yeah, thanks. So it's a very good point. So the carbon markets have generally been locked out of commercial forestry around the world. And that's really a reflection of the sort of additionality clause to some extent in the way that carbon methodologies have been developed. It's also partly because governments have taken that into the national account already. So if you look at the UK, all existing commercial forests, the landowner doesn't actually get any benefit from the sequestration from those forests. It's all going into the national account. And it's only in potential new plantings that carbon can be generated. And that's really a way of encouraging new planting. In the UK, we haven't met a planting target since the mid-80s. And so this is a way of government helping to support that, the drive for getting more trees into the ground.
David, let's just move to the one question.
Yeah, Phil Cottle, Forestry in Shore Forest. A couple of observations. I think you talked about support for forestry worldwide. And crop production is heavily subsidised by governments throughout the world for obvious reasons. Forestry isn't, except perhaps in Spain, and that's it, I think. On the environmental services, there are a couple of very famous examples, of course. The Catskills, cleaning water for New York, where they save billions of dollars every year in cleaning costs, and the famous Murray-Darling River salinity credits, David Brand behind that, are vast schemes, and there must be many more, and there are many opportunities, of course, to install these.
No, that's right. So the US is probably well ahead of the rest of the world in the sense of bringing a lot of these environmental credits from forestry. They are fairly specific to certain states and certain local catchments and things like that. And as you say, in Australia, looking at the Darling River salinity credits. But what we do see is there's an increasing interest worldwide, because for many of these issues, it's either the government and the taxpayer pays for these, or they let the private markets do it. And so in many cases, the governments are starting to encourage the private markets. So in Australia, it's only fairly recently that carbon credits can actually be issued against commercial afforestation projects. And that's because it's either the government puts the money forward in grants, or it lets the private markets do this in a way through the carbon markets.
We're running a couple of minutes over, but if I may just take moderator's privilege and ask you a kind of final question, Rebecca, which was on TNFD. You mentioned it right at the beginning, and the implications of initiatives such as that and associated ones in this space. What implications do you see for institutional investors and asset owners at a kind of a macro level?
Sure. I mean, the framework gives the ability for investors to make comparisons of opportunities, but it's also a useful framework for businesses to understand the dependencies that they have on nature and the impacts that their business operations have on nature as well, and then link their strategies to address those impacts and dependencies within the offsetting or insetting choices that they make. So at the moment, the disclosures that are made by corporates when it comes to nature and natural capital tend to be quite broad. They're not necessarily actually linked back to the impacts that those businesses are having on nature, and so they might be buying biodiversity credits that are in completely different regions or aiming to have a very different output on nature than actually what that business operation is based in. So I would say that the TNFD is there to help, one, understand what those dependencies and impacts are, and two, allow corporations and investors to select projects that really link back to what they're doing and have a more direct impact on the wider natural capital industry that's evolving, rather than being quite we look great over here, but don't look too closely over there.
Thank you, and thank you to our panelists. So I think going to be around over lunch to answer any further questions. Certainly natural capital and biodiversities for our broader kind of membership of global investors and asset owners has been a topic that has really increased in prevalence and priority over the last 18 months. So we'll see that continue, I think. Thank you very much. I think we'll break for lunch now.
Perfect. Thank you.